Hello students, welcome to today's session on preparation of cash flow statement using indirect method as per Accounting Standards 3. Okay, so students, before we take up to the question, I would like to give you the format of making the cash flow statement. Various heads we have already talked about in the earlier video. So continuing from that video, you can say in case if you want to know that theory part, you can look into my earlier video. So the main heads for the cash flow statement are the cash flows from operating activity. We registered or record the cash flows from operating activities, from investing activities, from financing activities. Added up together, that is net increase or decrease in cash and cash equivalents, A plus B plus C. Plus we add cash and cash equivalents in the beginning, and that becomes my cash and cash equivalents at the end. Now, let us do it with the help of a question. All right. So, let's. So we have this question in front of us. We have the financial statement of Garima Limited. Prepare the cash flow statement. Now, as you know, I'd already shared the balance sheet format as per Schedule 3. This balance sheet is made according to that only. This is my previous year business balance, and this is my current year ending balance. Okay, then apart from this, we have some more information, that is note to accounts, which is given in note to accounts, and then some additional information is given, that is depreciation charge during the year is 32,000. Now, so let us start doing this question. Okay. So the starting point, that is, we start with cash flow from operating activities. That is A. Cash flow from operating activities. Okay. Let's see from where do we start in this. Okay. So we start with the profit from as per the balance sheet. Profit as per balance sheet, right? And how much is the amount coming here? That is 40,000 minus 28,000. 40,000 minus 28,000. This is the addition of amount in this year. 40,000 minus 28,000. So this comes to how much? This is 12,000. Okay. Now starting from here, this becomes a starting point. Then we talk about the now the next thing that we are going to add is the proposed dividends. Why? Because these are the profit part of the profit of the current year. Now let us see how much are the proposed dividends for the year. Okay. This is 4,000. Okay. So let's add it, put it here, 4,000. Okay. Then what? Then next comes the provision for taxation. Provision for tax. This is 12,000. Okay. Then the next thing that comes now is the yeah, we can have it here itself, so that now finally we can add. So added up all these together, what do we get? Now if we sum all these together, we get net profit before tax and extraordinary items. So 12 plus 12 is 24 plus 4. This makes it 28,000. All right. So we have it here as this thing. Now the items to be added in this are the depreciation and operating profit before working capital. Using this, we are going to calculate operating profit before working capital change. So depreciation has to be added now. Okay. So we write add depreciation. Okay. Now, how much is depreciation given in the question? Let's see. So the depreciation given is 32,000. We add this 32,000 to this, right? And after this, what do we get? We get operating profit before working capital change. Working capital change. 28,000 plus 32,000. This makes it 60,000. Okay. Now to this, what do we now we do this operating profit before working capital change? We need to make the adjustments for current asset and current liabilities. So how do we make this adjustment? We add increase in current liabilities and decrease in current assets, and we minus decrease in current liabilities and increase in current increase in current assets. So let us see what all do we have. Let's see. Okay. Okay. First of all, let us see the current assets. This is my previous year, this is my current year. Uh, Inventories are increasing, trade receivables are increasing, cash and cash equivalents are decreasing, but then we are not going to take this. Okay, current asset, other prepaid expenses are there, these are increasing. Then let's see the liabilities part. Current liabilities, trade payables are increasing. Short-term provision, that is provision for taxation, we have already taken for this year. Okay, chalo. So now let's see what all to be done here. So now add. Okay. First of all, the current liabilities are increased. Let us add that. Increase in current liabilities. Okay. So increase in current liabilities, the first thing that we saw was that is trade payables. Okay. Trade payables. And what do we find in trade payables? There is an increase of 1 lakh. So this 1 lakh is recorded here. Okay. चलिए. Then what next? After trade payables, then we have what? Do we have any other current liability which is increasing? I don't find any, right? Now we go to the subtraction part. So less. Okay. So what is to be less in here? First, increase in current increase in current assets have to be reduced. So increase in current assets need to be reduced. Now, what all do we have here in this? Under this head, we have first thing first, that is, we have other current assets are there, which are increased by 8,000. So, other current assets have increased by 8,000. Okay. Then next we have that is mm, inventories have increased by 1 lakh. Inventories have increased by 1 lakh. Okay. Yeah. Then what next do we have after inventories? Then these trade receivables. See, trade receivables are increased by 60,000. Okay. All right. Now let us find out the net. Yeah. That is, this is incoming and this all is outgoing. Let us find out the net from here. Okay. So, how much do we have? Let's do. This is 60,000 plus 8,000, 68,000, 1 lakh 68,000. In my negative, 1 lakh is in positive. So the net over here would be, that is, okay, let's write it like this only. That's going to create confusion. This is the sum, and here the sum is 1 lakh. Okay. Now added up all these together, what do we get? We get net cash, cash generated from operating activities. Let's find out how much cash has been generated from operating activities. See, 1 lakh minus 1 lakh 68,000, that becomes 68,000 in negative plus 60,000. So again, there is this negative 8,000 in negative. This is the cash generated from operating activities. Then now comes the now, as I said that if income tax from or income tax from business activity is there, then it has to be paid off here itself. So how much tax is there? See, short-term provision for taxes. Okay, provision for taxes, 12,000 has been provision has been made for this current year, which we have added, and then this was the provision for last year. This last provision made last year is paid this year as the tax, income tax. Okay, so we are going to now less income tax. How now we come to part B. Part B is now regarding investing activities. So now we have part B is cash from investing activities. Here we are concerned with fixed assets, incoming and outgoing in simple, very simple crude terms. Okay, so okay, let's talk about these fixed assets. The tangible assets, previous year it was 2 lakh. This year it is 3 lakh 64,000. Do we have anything else in note to account? Let us see regarding this. No, we don't have anything related to the tangible asset in the in note to accounts. Okay, so that means this balance incurred this year is due to or uh, towards the purchase of asset. All right. Hmm. Okay, towards the purchase of asset. But at the same time, we have this 32,000 as depreciation also. And as we know, this depreciation is charged on the fixed asset only. That means now we'll have to make a machine account, this fixed asset account and find out the actual value of the purchase. So now let us make a fixed asset account here and find out this thing. Okay. in the previous year, the value of fixed asset was 2 lakh, right? Now, this is fixed asset. That means this value, this is going to persist for a long time. Okay. So what do we write here? We write here as balance brought down 2 lakh. Then depreciation is charged on as 32,000. So by depreciation account 32,000. Okay. And then how much is the value of asset in the current year? That is 3,64,000. So what do we write here? By balance carried down is 3,64,000. Now let's balance it, and the balancing figure here would be the purchase price of asset in this current year. Okay. So for this, what do we write? To bank account, that is, and narration is written, that is purchase of new asset. Okay, let's see. So this is how much? 3,64,000 plus 32,000. That makes it total of 3,96,000. The balancing figure is 1,96,000. Now this is the actual price of purchase. All right, which will be posted here. So cash from investing activities. Now, so the first thing that we are going to post here is that is purchase of fixed asset. Okay. Purchase of fixed asset, and amount spent is 1,96,000. 1,96,000, and that is the only spent. As you can see, no incoming, no asset has been reduced. That the money has been received. So there is no cash inflow. It's only cash outflow. Okay. So finally, we write that net cash from investing activities is a negative of 1,96,000. So that completes my part B also. Now let's move to part C, that is cash from financing activity. All right. Now, from financing activities, from where are we generating the cash? So, first that is we have issued the equity shares, the company has issued preference shares, and company has paid dividend. So we are on now the third part, that is cash from financing activities, and we have three modes or three heads under this. Issue of equity, that is cash inflow from equity, issue of equity shares, and issue of preference shares. So let us see how much cash has been received from issue of equity shares and issue of preference shares. Okay, from issue of equity shares, this year the company received cash worth 1 lakh. Then from preference shares, the company received cash worth 60,000. And then dividend have also been paid which is 4,000. So finally, net how much, what is the net here? Again, net. So this is 1,60,000 minus 4,000, that is 1,56,000. Okay, so this much has been received here. Now, then, so we say net cash from financing activities is how much? 1,56,000 positive. Be happy. Yeah. Now, after this, what? Now, as per the format I had given earlier, that is now net increase or decrease has to be calculated. That is A plus B plus C. So let us find out this. So now net cash. We can write net cash. We won't write net increase or decrease. We still don't know whether it is increase or it is a decrease. 12,000 negative figure, 1,96,000 a negative figure, and 1,56,000 is a positive figure. So taking this together, how much do we get? We get a negative of 52,000. Okay. Now, in this, what do we do? Then in this, cash and cash equivalents at the beginning are added. So let us see how much cash and cash equivalents we had in the beginning. Okay, so that is beginning means this part. That is end of last year is the beginning of current year. This is 80,000 cash. So we say cash and cash equivalents in the beginning. This is 80,000 plus, right? So added this together, what do we get? Now cash and cash equivalents in the end. So 80,000 minus 52,000. And what do I get? I get 28,000 here. 28,000 I've got here. Now, this is the same amount as we see here. See, the position of cash and cash equivalents at the end of current year is 28,000. We have arrived to this number 28,000 here. Okay. So that's all for today's session, students. I hope you all understood this topic. Keep practicing and I'll see you the next time. If you have any doubts, please contact me through my Urban Pro profile. Thank you.